Hello, this is Graham Bibby on the 29th of the 9th, 2015. Coming to you from an unusual day in the week. This is Tuesday instead of the usual Friday. And the reason for that is I wanted to see a bit more market action before I did send out this Camtasia, because I really want it to be informative. And following last night's market action, which is very disappointing market action, I think it will be informative. So we're going to start off here with the Dow Jones Industrials, Dow Jones Top 30. And the reason I'm showing you the US is the leader in market direction. So whether you're in Hong Kong, UK, Germany, Italy, Singapore, Malaysia, wherever, what happens to the US stock market is reflected in other markets. So some people say, US sneezes and the rest of the world catches a cold. And to some extent recently, we've also seen that with China when that market imploded. There was shudders and jitters around the world because people were wondering whether that stock market collapse was telling us of more difficult times ahead, because China's been the main driver of economic growth. So just zooming in on this Dow Jones Industrial 30, this was breaking out to the upside. We got higher highs here. We hadn't quite straddled this 40-week moving average, which was falling. And now, we came back to test this level, which is okay, and started to rise. But the strong drop last night means we've got a lower top here, and we've marginally gone to a lower low, and we've broken that uptrend. So I am quite concerned. I'm going to show you something later which might make you even more concerned, but this is the Russell 2000, which is, more in the mid-cap range. And we definitely shown you before these lower tops and these lower bottoms, and we broke below this support level. Then we went into free fall, which we kind of done here. So this concerns me because, we were getting this low is higher than this one, this low is higher than this one, this high is higher than this one. So that means that people were buying in again, and we were moving to new highs, and we actually were breaking above this falling moving average. But now we've been slaughtered to the downside, so it's a bit of a concern. When I look back at this chart and change it to a weekly chart, boom, like that, it's even more concerning because, this moving average here has largely supported the uptrend. And we are now below all of this support level, and we backed off of it. So that's very worrying. And you can see it again more clearly on the S&P 500. Here's the uptrend. We marginally broke it there, tried to zip above it, but we couldn't really make any progress. And now we've turned over. You can see quite clearly here, we had a rally too and turned over. That is not great. This is the NASDAQ, same thing. Again, supported all the way up and then turned over. All right, I'm just going to get a quick whiz through a number of markets to show you why I'm concerned. Let's get rid of our Alibaba trade alert. This is the Australian stock market, which has been, imploding since April. This is the Aussie dollar against the US dollar. This is the US dollar rising against the Aussie dollar. So if you've actually been in this ETF, which can be in our FOS service, it's gone from 42 to 64 in a year. That's 50% move, and you're just on deposit in currency. So my Insider Club self-managed super clients in Australia have actually been benefiting by being in the Insiders Club, not just from the stocks, and that's been a bit of a more difficult time recently, but certainly from the currency. This is the US dollar against a basket of currencies, and it's really been trading sideways. It's in this range since March of this year. So it had a huge move up here, 20-something%, and then been moving sideways. In Europe, where our famed Mr. Buffett has gone, this is what's happening in that market. This is the ETF, which was 44. It's 29 at the moment. That ain't looking great. Here's gold. Could have been bottoming out. Sure looked signs of it in August, but again, that's come off. Commodities index way down. Just June of last year was over 300. It's below 200. Looks like it's turned over. That's not looking great. Germany, the powerhouse of Europe. Look at this. Since May, the ETF's gone from 30 to 24. That's not great in anybody's terms. Hong Kong turned over, gone from 25 to 18. That is huge. That's a huge move to the downside. Singapore, it was almost 14. The ETF is now 10. Again, significant move to the downside, but 35%. Thailand, which had looked like it was recovering, ETF was 85, it's 62. But one thing all of this tells us is there's some great profits for the future. Here's the Russell 2000, which is made up of 2,000 stocks. And again, you can see this potential turnover, although there is support potentially here. It doesn't look great. So right now, in view of last night's fall, here's copper, been in a huge downtrend since 2011. It's down 60-odd%. Copper, how can it be down 60%? Isn't this what economies grow and things grow on? This is emerging markets, bull market fund. Went from 30 to 11 this year. That's quite dramatic. But this is profits for the future. I have to exit because the volatility in the market, if I can just show you here, this is my great undervalued stuff. Now, Apple doesn't look too bad. AOS doesn't look too bad, but Celogen has fallen off the cliff here. SYN fell off the cliff. Starbucks, which had been holding up and going up nicely, in one day is destroyed 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days of movement gone in one day. That's not great. And my old friend's Facebook, same thing. 10 days of upward movement gone in one day and we're below the moving average. I don't want to exit the markets, but I have to at the moment because the risk reward I think is wrong. I'm very concerned. If you've got a portfolio out there and you're just closing your eyes, you're taking action. It's very risky action. So right now we've gone back to cash. These are great undervalued stocks. I am reviewing something that I haven't done for some time, which is funds that are inverse to the market. So this is the smaller companies ETF, and that's rising like a rocket. So if markets continue to fall, we could move into these areas. And this is, you see, this was a downtrend. This is new uptrend. I don't know if I've got it on there. No, I haven't got it on there. Well, if we look here, you can see how much of a downtrend it's been in. It's gone from 70 something to right now 13, but it appears to be in an uptrend. So if the markets continue to fall, in my fund optimization service, we'll be buying bear funds and we'll be making money from this significant fall to upward movement. So right now we've gone back to cash. Cash is king. It's a great time to set yourself up because there are some magnificent buying opportunities. We have some magnificent stocks, but for me, the key is protection from the downside, limiting the downside. You can't eliminate the downside, but minimizing those losses as much as possible. And when we get the new buy signal, then there'll be significant profits to be made. This is Graham Bibby on the 29th of September 2015. So please look out for another video that will be coming your way. Will it actually be a video of me talking to you and showing you on a screen where the opportunities are in the weeks and months ahead. Graham Bibby, 29th of September 2015, over and out for now. And above all, make sure you're protected. Bye-bye.